Okay, this is our ICT PO3 model. Sometimes people call it AMD. This is just accumulation, manipulation, distribution. It's a 3-point model that ICT uses, that I use as a confluence, because when paired with my other model, it's pretty good. It's pretty dang good, okay? Yeah, gives me some A+ setups. But first, let's just hop straight into it. I don't want to waste your guys' time. If you're not already in the Discord, though, check that out, because I teach concepts just like this live to you guys for free. So yeah, let's get into it. So I'm going to draw it out first before we actually get into it. If there's any background noise, please ignore it, please. I'm sorry. But first, we have accumulation. So what is accumulation? I'm going to draw it out real quick. And as you see here, essentially it's just our form structure or formed liquidity. All right. Retail traders would think we're ranging, right? Which is dumb because we're not ranging. We're just forming liquidity to then take out in the market. All right. So boom, this is our accumulation. We mark out our accumulation when we're identifying it with our GAN box. So we would take our GAN box, boom, and then identify our liquidity, right? So what's the next? So first we have accumulation. I'm gonna type it out here. Accumulation is number 1. Number 2, we have manipulation. So our manipulation move, this is a trap, right? This is the trap for our retail traders. So say we have this resting sell side liquidity down here. If you don't know what liquidity is, just check out my liquidity video. I made like 2 other videos on liquidity. So, all right, say we're we're not ranging, but say we're still forming liquidity, and now we come sweep this liquidity. This is a trap for our retail traders, because now our retail traders think we're going to continue lower and probably have like a break structure like that. But no, it's actually the complete opposite, right? So we're going to come down, sweep this liquidity, and then move higher. Which brings us to our point 3, distribution. Our move coming higher. So with distribution, usually it's not like this. It's not going to look like this. It's not going to look like a straight line just higher like that. In very little cases it may, but most likely, like almost 99% of the time, it's going to look like this. We're going to be retracing back into these fair value gaps to continue higher. Or another thing we'll do is, as we're continuing higher, we will be retracing into these fair value gaps. So sometimes we either even come in versus fair value gap and then come even higher from that. So why do I kind of look at the 2? So say we're only just retracing from these fair value gaps and coming higher. All right, so we got fair value gap here that we retrace from, and yeah, here. Say these are fair value gaps, right? We can expect market to then come back lower and just completely tank through these imbalances, right? And just continue lower. But on the opposing side, say we were inversing these fair value gaps. Let me draw them back out. Say we were inversing these fair value gaps. And it looked like this. And this. Like that. If we were inversing this, we can expect to continue our uptrend in the market, right? Because we're already feeling these imbalances, don't really have a need to come lower. But if we do retrace from them, then we have a need to fill the imbalance, and those big market movers and institutional traders will use those fair value gaps as a whole magnet. All right, I already explained that in my fair value gap video. You guys can check that out though, and how we use fair value gaps. But yeah, so that is pretty much it. So that would be called here. This would be called bullish AMD, bullish accumulation, manipulation, distribution, AMD. So let's look at bearish AMD real quick, and then we'll hop into the candlestick charts. So pretty much same thing. We're forming liquidity. Retail traders think we're ranging right here. We're going to then take out this now formed buy side liquidity with a liquidity sweep, possibly, and hopefully if this is paired with a SMT divergence at the highs, then that would be even better for us, right? That's kind of what I look for. They'll signify like probably an A+ setup. And then we come lower, right, to have that distribution move lower. Okay, so it's the same thing, just in the other direction of the market, right? Accumulation, forming liquidity, manipulate. That's why it's called manipulation. We are manipulating those retail traders to then enter in longs, and then we just tank the market and go short. All right. And finally, just entries. So say we have our AMD playing out. That was horrible. Gosh, dang it. So say we have our AMD playing out. Boom, manipulation. So before that distribution move, so we try to catch the distribution move. That's the whole point of this model. So we're going to look for a fair value gap of some sort, or an order block, or some sort of confluence that will say we can retrace and come lower or higher if we were looking for higher. But yeah, so we could, don't try to like bottom take this shit. You're not TJR yet. So it takes some good experience to be able to bottom take these moves. But look for that fair value gap and retrace off of that, and maybe paired with even a break of structure. So not even looking at that one, but say if we had a fair value gap like right here, then you would enter in. Because if we're paired with a break of structure, you can check out my break of structure video if you don't understand what that is. But we got fair value gap mixed with break of structure, and say we had a SMT at the highs. Well, that would be beautiful. And my chart usually kind of looks like something like this. All right, that would be beautiful. Okay, so let's check out this playing out in the actual live charts, because that's what we're here for. All right, I told you guys this will be a little quick. We're kind of speed running this. All right, first example right here. First, when we're looking for this in the market, I know it's hindsight, so it's a little different right now, but when we're looking for this, we just want to identify a point of kind of like choppiness or liquidity in the market, like liquidity being formed. So it'll be an area of consolidation. So as you see right here, we're consolidating a price a lot, creating relative highs and relative lows. And then, so I can, yeah, let me draw it out with the path tool. Yeah, relative highs, relative lows, or relative highs, relative lows, relative highs, relative lows. And then we come up, we sweep out those relative highs. This is our manipulation move. Retail traders, they're so dumb because we don't even have displacement yet to the upside. They're thinking, oh, we're going to continue to go higher since we took out these highs. No, complete opposite. We're going to then continue lower, right? And then look for like a retracement in the market at some point. So boom, I can mark out this fair value gap that we have right there. We'll retrace from that perfectly. Enter in right here. Beautiful risk management, which we'll get into soon. I'll probably put it above the fair value gap, above that, just for safety. And we can see how we would play out this trade. And as you see, it went down a lot. A lot. Obviously, you wouldn't catch some generational wealth play like this, but this is a scenario of how AMD can play out. All right. Just by the simple accumulation, manipulating those retail traders, and then catching the distribution move to the downside of the market. All right, and yeah, it's played out Thursday. Oh, this was all the way back in the beginning of June. Okay, boom. All right, now let's get another example in here, so we can really hone down on this strategy, or not strategy, but model. All right, boom. So first, you marked, use my GAN box, identified relative highs and relative lows in the market. Boom, mark that out. So what are we looking for now? We have relative highs, relative lows, and essentially our accumulation point of our model. What are we looking for now? Our next move, manipulation. So we're looking for a manipulative move either to the downside or upside of the market to indicate our then subsequent move in the market, okay? So took out these relative highs from this liquidity sweep, right? So retail traders think we're coming higher, come take out the retail traders with this liquidity sweep and come lower. Now let's look for our fair value gap to enter in off of this trade. So on a 2 minute, so in this case scenario, I probably end up using an order block because it's just like more like you can see it. If you don't know what order blocks are, they're my most recent video. Well, at the time it's June 22nd, but yeah, they're just the previous leg, the last candlestick of the previous leg before the expansion, either higher or lower. So right, this is the last candlestick of that previous leg, like between here and here. All right, so we came and retraced into this order block. Out. I'm working. Like I was saying, we have an order block, right? So we want to see us retrace back into this order block because this is a very nice confluence for us to enter in off of. So boom. Also have a fair value gap up there. That would be great to see a retracement from, which we did. Enter in our shorts position. Probably take it towards our stop loss right here, which we'll get into stop losses in another video too. I take it towards that previous sell side, and boom, easy play right there, and it went all the way down here. Of course, you wouldn't like catch this whole thing; that would just be generational wealth at that point. And you probably could hold it to then, but yeah, no. So, boom. This is AMD. It's pretty simple. Like I said, you're probably thinking like, is this really it? And yes, it is. It's nothing much to it. Got accumulation where we form liquidity, and then manipulation where we take out those retail traders either with a liquidity sweep, and if that's paired with an SMT, that's even better because that signifies that we're going even lower or higher depending if it's at the lows. And then our distribution move where we catch an entry with a fair value gap or order block. If you didn't see that, that's in my most previous video. And then we just ride it down to our draws on liquidity. And this will lead us into my next video where I talk about my model. All right, and it's kind of similar to this. All right, it's actually pretty much is this kind of, but a little different. All right, but yeah, you can do this on any time frame. It doesn't matter 1 hour, 1 minute, I was gonna say 1 second, but you don't really want to be looking at it on the 1 second. But yeah, 4 hour daily, use it for your daily bias. But yeah, if you're not in the Discord already, we do live calls literally every day for free. Check that out if you want to. If you don't, it's all cool. But I like the community. It's nice. It's active. Always doing something. But yeah, cool people, funny people. They be flaming me, but it's all good. All love. But yeah, you guys stay safe. Remember, God loves you no matter what. I'll see you guys in the next video where I actually explain my model. If you do have any questions on this, hit me up in Discord, and then I'll talk to you guys there or in the comments. Either one, it's up to you. I'll see y'all. We love you. Peace out.